Yo, welcome back to the channel, everybody. We on day 14, the very last episode of the Path to Profitability. Um, yeah, man, day 14, we got the strategy. Finally, looking at the actual strategy that we use in the market to profit off these trades. So, putting everything together now at this point. Um, Yeah, so before we get into all that, make sure y'all go hit the sub button, hit the notification bell so y'all don't miss anything coming up. Finally getting into the trading and all that good stuff. So make sure y'all go sub to the Twitch. That'll be down in the description as well as Discord. So yeah, I'm not gonna take up too much more of y'all time. It's a longer video. So we're gonna get right into it.
Let's look at this. Let's look at this. Let's look at this. So here we are on the S&P 500. S&P 500. 500, 500, 500. So let's imagine that we are right here. Okay. Market is literally within the next millisecond going to open. Okay. This 30-minute candle just closed, which means market is open. Okay, we obviously can't see the market open candle forming, but market is now open. What am I going to be looking at? Well, the first thing that I'm going to be looking at is where are our draws on liquidity for the day? Because again, what is my thought process? And I'm kind of going to break this down while we're going through this trade that I took on Friday, so that you guys can get a good gist of what I'm looking for trades, okay, and how I break this down. So the first thing that I'm looking for is, have we swept out liquidity yet? Where are our draws on liquidity? And what point are we at within current market structure, okay? So on the S&P 500, this candle, it doesn't look like this. It's just formed like this because of the trade replay. But on the high time frames, we are continuing this 4-hour bullish market structure. Okay, so we come up, we fill this gap, we see extensions out of it. However, we form a down candle right here. Same thing here on NASDAQ. However, we actually disrespect this gap. However, there's one gap underneath it, so it's not a full-fledged disrespect of the bullish order flow that we're in. We are actually just filling equilibrium from this low up to this high. Okay, so we filled equilibrium, we respected it, we moved up. So at this point in time, I'm seeing on the high time frame, we're in bullish order flow. Okay, we inverse this top gap right here, right? So we move down, we inverse this top gap, and now we're respecting this 4-hour equilibrium. And on the S&P 500, same situation, we inverse this top gap. So previously we were in a downtrend, but then we inverse this top gap. We also broke structure to the upside. So boom. We know that, hey, we're in an uptrend now. And how do we confirm that we're in an uptrend? We come down, we fill this gap, and then we see legs up out of it. So awesome. That's my first thought process. That's the first thing that I'm thinking when I see all of that go down. So I say, cool, but that's before, way before market open. From there, we're going to be looking at Asia session. What else can we do? We can look at previous day highs, which are right here. And then we have previous day lows, I believe. Nope, these were previous day lows all the way down here. Okay. So we have previous day low right here. Previous day high. Sorry, right here. What day is this? Thursday? Sorry. I'm getting all mixed up. There it is. Okay. We previous day high, previous day low. Boom. What else can we look at? Well, we can identify.
My desk is a fucking mess.
Boom.
Right now.
We have Asia session low from this new day that we opened. We have London session low right here. And then we have, let's see right here, this is London session high. Awesome.
So all this work, is why. So like when New York session opens at 9:30, you should be on the charts at like 8:30, 9 o'clock ish to give yourself a half hour to do this and mark your charts out and look for your confluences and all that prior to market open. So when market opens, you can, all right, now you know what's going on, you know what you're looking for. Now you're kind of reading and reacting off what the market is doing.
Right now, we're in bullish market structure on the 4-hour. We came down, we filled this continuation confluence, we're seeing legs up. Me personally, coming into this day, I'm pretty bullish, okay? Why? Because we have draws and liquidity to the upside, right? We have London session high right here. We've got some hourly highs stacked up right here. We also have previous day high all the way up here. Okay, this is previous day low. This is Asia session low. And this is London session low. So, what did I just do? What's the first step of finding my strategy? Well, it's daily bias, and we had a daily bias video like 2 days ago. Okay, so I'm looking to, one, identify the high time frame trend, identify at what point in time are we in the high time frame trend. So at this point in time, what are we in? We were filling an imbalance and we were seeing extensions out of it, right? So for me, I'm like, okay, cool. We're filling imbalances. We're probably going to want to seek out some form of external draw on liquidity because that's how trends move, right? If we're in an uptrend, which right now we are, we inverse this gap, we come down, we respect the 4-hour gap, and then we start seeing legs out of it. Awesome. Our targets should be up here, right? So the first thing that I'm doing is doing that, identifying what order flow are we in on the 4-hour and on the 1-hour, okay? The next thing that I'm going to want to do, sorry, disregard that massive candle, that hasn't happened yet. The next thing that I'm going to want to do is identify all of our draws on liquidity for the day. So what did I just do? I went in and I said, okay, we have previous day high right here. We have previous day low down here. We have a session low right here, which is Asia session. We have session high right here, which is London session high. We have a session low right here, which is London session low. Asia session high had already been pushed past London session highs and there was no reaction off of it. So in turn, that draw on liquidity is pretty useless for us. Same thing here on the S&P 500. We have London session high, we have previous day high, we have Asia session low, we have London session low, and then we can even mark out these hourly highs right here that look pretty good.
Goddamn.
So now we have identified the high time frame trend that we're in and we identified the draws and liquidity. So me personally, what am I going to want to see? Especially right now because we're in an uptrend, I'm going to want to see candles out of and reacting bullishly again. Disregard this hourly candle right now. Let's imagine as if we can't even see this. But I want to see price start reversing up because right now on the S&P 500, we're in a downtrend. And on NASDAQ, at this point in time, we're actually in an uptrend. This candle shouldn't look like this right now. But at this point in time, we are in an uptrend. And actually, even better for us is we are sweeping out liquidity to the downside on the 1-hour. So for me, I'm thinking, hey, if we can get confluences to the upside, that to me means that, hey, we're going to want to come up and take out all of these very solid draws on liquidity, right? We got London high, we got hourly high, previous day high. All of these highs up here look great, right? And we just recently saw that price came down and swept out these lows, and now we're reversing. And awesome, we already hit one of our draws on liquidity, but market is just opening, so we weren't able to take a trade on that. Maybe we can take a trade to be able to target some of these highs. So the first two things is I establish my bias, okay? So my bias today is bullish. I'm looking at all of these highs here, all right? The second thing that I do is identify the key draws and liquidity. Now again, what are draws and liquidity? Areas where price has the potential to fill orders, okay, to cause reversals, right?
Man, fresh off work, y'all, hard working men.
In mind, I'm looking at these draws and liquidity as one of two things, okay? Entries and targets. right now, we just pushed up above this Friday's high. On the S&P 500, London session high on the S&P 500, we're significantly underneath this high right now. What is a concept that we learned when we are pushing above a high on one of the indexes and then below a high on another one of the indexes? An SMT divergence, specifically a bearish SMT divergence. So, even though we are in bullish market structure on the 4-hour time frame and we're respecting bullish market structure and I probably want these highs, what do I have to consider? I have to consider that, hey, we might be potentially sweeping out these orders right here, missing these orders right here, and forming an SMT divergence from this high down to this high, from this high up to this high. And what is the S&P 500 telling us about NASDAQ? That, hey, we probably want to go down and we actually might want to take out these London lows, these Asia session lows, maybe even the previous day lows all the way down here, right? So, with that in mind, let's play the market out a little bit and let's see where we end up going. All right, so we'll play this. Boom. This candlestick forms. Does this give us any real overall sense of where the market's going to go or what decision the market has made? Not really, right? This is a pretty indecisive candlestick. The S&P 500, we are still remaining underneath these high time frame highs. So for me, I see this and I see that we're underneath these high time frame highs. I'm thinking, hey man, we're still above these highs on NASDAQ and we're still underneath these highs. My bias is still the same. I would potentially want some sort of high time frame entry to take buy positions, but I have to be conscious of a potential bearish SMT. So from there, let's play it a little bit more. Boom. Okay. So from here, we end up getting, boom, another down candle. So now I'm thinking, okay, we've made an extension up. We were unable to sweep out this high. We made extension up. We swept out this high. So the S&P 500 is the leading index to the downside right now. However, we are still in bullish order flow to the upside on the 5-minute, right? So as well as taking into account the high time frame order flow, which at this point in time is bullish, we also want to take into account the low time frame order flow. So I'm looking at the 5-minute and I'm saying this is bullish. We haven't broken structure to the downside yet. For me, even though we're making a bearish SMT divergence, I want to see a change in order flow. Okay, I want to see a change in structure because it's one thing for us to, again, sweep out, have the orders, the potential to get orders filled, but just because we have 2 legs down doesn't mean that all of these sell orders were filled for us to reverse this, right? It just means that there's potential because we came up here. How do we know that orders are got filled from those highs? When we break structure. So right now we could just be retracing to move higher to target these highs, right? So we need to continue to be patient. So let's play one more candle. Boom. Now do we think orders were filled? Probably, right? So I see a massive down candle and we break structure to the downside on NASDAQ and on the S&P 500. Now what is confirmed? NASDAQ swept out a draw in liquidity. We have a confirmed bearish SMT divergence. NASDAQ for sure filled orders up here. How do we know that orders were filled? Because we changed the current order flow of the low time frame. From there, what am I looking for? I'm looking for a continuation
this is
of
a
the
master
low
class,
time frame trend in order to prove to me that, hey, we just broke this and we're starting a new trend, you know, to the downside. I want to see that new trend continue to the downside. So again, the change in order flow or the change in structure could have been seen in 2 ways, either via break of structure or an inverse for value gap. In this case, we didn't have a fair value gap to inverse within this leg up, so we had to wait for a break of structure, and luckily the market gave it to us. Same thing here on the NASDAQ. We didn't have a fair value gap that we could inverse, so what did we wait for? A break of structure. Now, if we're waiting for a continuation of the current trend that we're in, what do we have to wait for? We have to wait for one of our continuation confluences, which is either a fair value gap getting filled or equilibrium. So right now, we don't really have the opportunity for either of those because we don't have a bearish fair value gap that's formed yet, and we don't even have an up candle to draw equilibrium from this high down to the low of the up candle. So let's see. And again, I'm going to want to now be focusing on this trade specifically on the S&P 500. Why? Because it's the leading index, okay? And it's leading to the downside, meaning this index didn't have enough buy orders to be able to push above this high. So what is it signaling to me? That the S&P 500 is the more bearish index. So if I'm looking to take a short position, I'm going to want to take a trade on the index that doesn't even have enough buy positions to be able to push up above these highs, that already has enough sell orders to be able to push down without needing to take out these highs, right? So I'm going to want to focus my targets on the S&P 500. Okay, price comes down, breaks structure right here. From there, let's play it. Awesome, boom, big candlestick to the upside. So now what am I looking at? I'm saying, okay, from this high down to this low, where are we at? We just filled equilibrium. Awesome. Once we fill equilibrium, we can wait for one of two things. Me personally, I like to scale down to the lower time frames so that I can get ahead of this. But once we fill the confluence, what's the last thing that we need in order to be able to enter? Well, we just need confirmation that not only was the confluence filled, but that we are actually going to move down out of it, right? Because it's one thing just for price to push into equilibrium, but price easily could have just gone all the way up, right? So if we just press sell right when equilibrium gets pushed into, then why did we even draw equilibrium in the first place? It's pretty much useless. Why do we have equilibrium there? It's to be able to see price come into it and then respect it. And then that's when we're looking to enter. Okay, continue, and same thing with a fair value gap. We didn't make a fair value gap on this, but if we have a fair value gap, do I enter the trade right when price pushes into the fair value gap? Well, no, that would be stupid, because if the candle is still forming and right when we get into the gap, what happens if price just keeps going higher and higher? You're immediately going to get stopped out. And that all of that could have been avoided by just waiting for price to fill the confluence that you want and then wait for confirmation down and out of it. So you can wait for one of two options here. You can either wait for just the following 5 minute candle to close bearish to prove like, hey, we filled this continuation confluence and the market is showing that we want to move down off of this. Or you can do what I do and what the majority of other people do, is you can scale down to the 1 minute time frame and you can look and see, okay, so we came down and we came up, we filled the continuation confluence, whether it was equilibrium or a fair value gap. And then typically on these retraces up, on these 5 minute retraces, we are going to break 1 minute structure back to the upside, either via an inverse fair value gap or through a break of structure. So at this point in time on this candlestick, we are bullish. We're bullish going into this continuation confluence, which on the higher time frame is going to be bearish for us. And we actually want price to break structure or get an inverse fair value gap while pushing into these confluences, because it's going to give us our entry confluence. What is my entry confluence? Well, it's simply just waiting for price to push into the 5 minute continuation confluence. And then on the 1 minute, we break structure to the upside. And then we just simply wait for a break back down or wait for a change in order flow back down. Because what is that proving on the market? It's proving that price came into a continuation confluence, and when we push into the continuation confluence that is supposed to be respected, of this new trend that we're forming. On the low time frame, we get a break of structure or an inverse fair value gap. That's proving to me that, hey, we filled all of the orders that we needed to up here, and we are actually going to continue this trend down. So in this case, I entered this trade. You guys can watch the trade recap. It was literally yesterday on Friday. I entered this trade once we inverse this gap right here. And I put my stop loss above these highs. Okay. And then from there, I targeted all of my draws and liquidity. So we had London session lows. We had, I believe these were the Asia session lows. We had these high time frame hourly lows all the way down over here. Okay. We had really good draws and liquidity on the high time frame. All right. Now, again, let me just walk you through the entire thought process of being able to take this trade. This is the step-by-step TJR strategy, how he thinks about entering trades. I need the potential for orders to be filled. Okay, how do we see the potential of orders to be filled? By us pushing above a high, a significant high, or below a significant low. Once we have the potential for orders to be filled, what do I need to see? I need to see confirmation that the orders actually were filled. How can I see confirmation of that? Through a change in trend on the lower time frames, via a break of structure, via an inverse fair value gap. From there, I want to see a continuation of that new trend that was formed. How do I spot continuation of a new trend that was formed? Via equilibrium and via fair value gaps. And then if you want to, during that process, when you're looking at the continuation, you can scale down into the lower time frames to be able to spot confirmation out of the continuation confluence to prove that price is going to go down a little bit earlier than just waiting for a 5-minute candlestick to close. Because notice this is going to be a lot better entry than if we wait for the next 5-minute candlestick to close. Because now, again, we would be entering this trade down here instead of up here, and one of our take profits has just been hit. So while my take profit 1 is getting hit, you guys are just now entering by waiting for this candlestick down. And again, we can look in here. It is very obvious that we push into the continuation confluence, and then we confirm that orders were filled out of the continuation confluence on the lower time frame because we're disrespecting bullish continuation confluences right here. So what's that telling me? It's telling me that, hey, we're disrespecting bullish continuation confluences. We're going to go down, right? And if that's the case, then we're probably going to sell off pretty hard towards our draws and liquidity, which again are where we are going to be able to offload all of the orders that we filled up here, which is the last step of our strategy. So we need the opportunity to fill orders. We need confirmation that that opportunity was actually taken by seeing orders get filled through a change in structure via break of structure or an inverse fair value gap. From there, I want to see a continuation of the new trend that is formed off of the orders getting filled via equilibrium or fair value gap. And then from there, I want to exit the position where we are going to be able to liquidate the orders that were filled. So again, where do we have the potential to fill orders? Up here, and in this case, we had a bearish SMT divergence, so that strengthens my bearish bias. Now you're probably saying, I thought you had a bullish bias going into the day. Yes, that's correct. I did have a bullish bias today, but what did the market do? The market proved me wrong and instead did what it wanted to do. So there's very many ways, or there's so many times where I'll come into the market and I'll be looking and I'll be saying, hey, these highs look really good. I want us to target those highs. And then we'll have this exact movement happen. And it's just like the market was like, you're just wrong for the day. Okay. And that's completely fine. We can let the market prove us wrong and we can still make money. Okay. So we have the potential for orders to get filled above these highs. On NASDAQ, and in turn, we made a bearish SMT, so we know that NASDAQ swept out the highs, ES didn't, so this is still a potential for orders to be filled. We saw confirmation that the orders were filled with a 5-minute break.
And just as a disclaimer, this is not close to the only strategy. There's so many different strategies y'all can use. So many different people have so many different strategies you can use. So if y'all don't like this strategy or y'all feel it's too complicated, there's much more simpler ones that you can go on YouTube. Hovier, Joovier on YouTube has a lot. I'll leave some links down in the bio for y'all to go check out, but definitely this is not the only strategy that there is.
Structure, we saw continuation of the new trend that was formed by 5-minute equilibrium, and then we saw confirmation out of that continuation confluence on the 1 minute, and then we entered, and then we are looking to exit underneath significant lows in the market where these orders that were filled are able to get liquidated and to be exited. Okay, so we can let this play out. You can see that the rest of every single take profit ends up getting hit. Okay, so we hit take profit 1, take profit 2, and take profit 3. And I was able to make a significant amount of money off of this trade. And that is quite literally how I look to take trades in the market every single day. Okay?
There y'all have it. That is the last episode, the last video of TJR strategy. His path to profitability. Holy moly. That's the last episode. We now are diving right into the charts. So y'all have a strategy. If y'all want to use that one, great. Like I said, I'll leave the link down below to a few other ones. Make sure y'all go hit that sub button, notification bell, so y'all don't miss any of the content. Also, Twitch, Discord, if y'all want to join in on the journey and be kind of a part of the process, more a part of the process, go hit those links as well. Sub to those. And yeah, man, I'll catch y'all in the next one. Live.